Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Just about 11 minutes left in today's trading day and really for the week overall. Of course, it is Friday. Let's get to the Drive to the Close. James McDonald is in our studio, CEO at Hercules Investments, Chief Executive Officer, Chief Investment Officer as well. They've got roughly $600 million in assets under management based in Los Angeles in our interactive broker studio right here in New York City. Welcome.
Thank you. It's a pleasure to be here. One of the most beautiful buildings I've ever experienced.
Oh, well, thank you. Yeah, it's kind of fun to be here.
It's a nice little home.
And a lot of free snacks, too, which is kind of entertaining. Interesting week, and here we are seeing a little bit of a pullback in the market, James, today, but it's been a bullish one overall. What are the interesting investment trends that you're seeing right now?
It's a great question. I think at the top, I have to say volatility is the most compelling buy at this level. It's at all-time lows. On the opposite side of the bull market, which has lasted longer than any bull market in history, both in growth and in tenure, the opposite side of that is volatility. It's at an all-time low. That's what I like to buy in terms of growth, in terms of where we're finding opportunities in this toppy market. I have to go outside of the United States. I like Ireland. I like Israel. Both entire economies can be held in a single ETF. Outside of that, we have to be very cautious. We were long U.S. stocks at the beginning of the year, but that was before the virus. No one has ever seen the scope and extent of what this virus can do because it's new. And so we don't know what's going to happen, and that is uncertainty, and uncertainty is what keeps stocks from growing. But what's most interesting, the question you asked me, is how quickly the market rebounded from that initial sell-off. That was extremely impressive to me, and it earmarks...
You're talking about the U.S. market?
I'm talking about the U.S. stock market.
Got it.
We've hit 52-week highs, all-time highs, days after the introduction of a global potential pandemic. That's very powerful, and I think it
Tells you what?
It tells me that all the previous risk-off bull market runs that we saw, post-trade deal, post-impeachment, post-risk going into the end of 2020 with geopolitical tension in the Hong Kong protests, after each of those risks to the market, we saw a shrug off and a rally. The same thing happened here with the initial spread of the virus. It tells me that this bull market is real. It tells me that we have to be persistent in understanding that the drivers are getting stronger. The unemployment report that came out this morning, it just underscores the typical concept that, this bull market can continue to go. Now, having said that, my job is to put money to work. So if someone hires me today or yesterday at a 52-week high, where do I put that money to work? We have to be very cautious, and so we're building portfolios with some volatility exposure to offset any pullbacks we get like we saw today.
So that volatility exposure...
so how do you do that?
Yeah, how does that play out then?
I'm so glad you asked me that question. This is a once-in-a-generation trade, and let me just set this up for you. So we're at 475 consecutive months of growth. It's an all-time record. There's only been two other times in history where bull markets even approached this. This was the post-World War II,
right,
and then the Roaring 90s. Nothing has ever even been close. And so we've gone longer and higher in this bull market than at any time in history. So on the opposite side of that, volatility has gone lower for longer than it ever has. If you look at straight statistical ratios, volatility is declining at a faster rate than markets are growing. And so that's the buying opportunity. I liken this buying opportunity to January 9, 2009, when General Electric, Coca-Cola, Bank of America, and Citigroup were trading at less than book value.
Right.
Unbelievable values. And so that's where volatility is. But unlike those companies that grow at a linear rate, when volatility returns, it's going to spike. It's going to spike dramatically. That's what volatility does. If you just look at the past week, a small 1.5% pullback on the S&P caused a VIX spike. The VIX is a popular fear index. The VIX spiked by 70%.
So are you actually buying the VIX, or what are you buying?
I'm getting to that.
Okay.
I wanted to set up so everybody can understand.
Patience.
This is an asset class that's difficult to understand because it isn't tangible, right? You can't walk into a VIX store. So the actual securities we purchase, it depends on how much upside someone wants. So just setting that up, the VIX spiked 70%. The VIX is a medium-term volatility instrument. Well, there's a short-term volatility instrument that you can buy through a security called UVXY. It's a triple leveraged volatility instrument.
That sounds scary.
Oh, but I don't want to tell the public because then I won't be the only one that can benefit from this and my clients. So UVXY, the way it trades, you can get the options on UVXY at a nickel or so over intrinsic value. So as an options trader, we want to find situations where we can really benefit from being right without overpaying the premiums. And so UVXY, when volatility returns, UVXY is going to run from, it was about $12 a month ago, it's trading around 14 or 15. UVXY is going to run to the 50s, okay? So if you understand options, we can get one strike out of the money for around $1. So we can own a strike that will ultimately be worth $35, $40, $50 for $1. That's the power of where we stand with volatility being low. And that's one example of a trade. That is a one strike out of the money. For those who really want to buy their beach house overnight, there's a 2 or 3 strike trade you can do, and you can buy these contracts for 20, 30 cents that'll be worth $50. And so this just underscores the remarkable time we in.
So when there's not really a lot of volatility necessarily in the overall market, you can play the volatility that you're seeing to some extent, or the moves, the dramatic moves that you're seeing in the VIX options.
So this is
we got about 30 seconds left.
Okay, so you can do it in the VIX options, but we're talking about UVXY. And so in any case, volatility is going to spike. It's a lot more expensive now than it was 2 weeks ago because we have the introduction.
Right.
But with the last 30 seconds, I'll simply say we can look outside of stocks and bonds and commodities for great upside. And the VIX and the volatility sector is a great way to do that.
No, it's kind of a refreshing way to do it, right?
Yeah. That's really interesting. Really interesting.
Play it on the moves.
Great first visit with us, James McDonald, Chief Executive Officer, Chief Investment Officer of Hercules Investments, looking after about $600 million out there in Los Angeles. He's here in chilly, cloudy New York City.
Oh, but it's so beautiful in these studios.
It is nice. Nice to see you. Thanks for listening to Bloomberg Business Week. You can subscribe to the podcast on iTunes, SoundCloud, or Bloomberg.com. You can also listen to our radio show every weekday at 2 p.m. Eastern, only on Bloomberg Radio.